Hello, Gerard Byrne from Volunteering North Queensland. Welcome to the latest in our segments on Management Committee Essentials. Today's segment is on financial accountability. For many people, long lists of financial records are very foreboding. People don't normally enjoy working with figures, unless accountants and others who are skilled in this field. But this is a very critical responsibility for your committee and your organisation. It's not just the responsibility of the Treasurer. The Treasurer has the principal responsibility, but every committee member needs to take a very keen and careful interest in what's happening for financial records. Every financial year, committee members must ensure that a financial report is prepared for their organisation. What should this report include? A review of the organisation's operations for the year, details of any important changes in the dealings of the committee organisation. For example, have you taken on a new lease on a building or a property? Have you purchased new equipment, vehicles, etc.? And what's the impact on your cash flow of these additional costs? Information regarding the organisation's primary activities. Care has to be demonstrated in financial management that you only spend money against the approved activities for your organisation. So again, you need to match your expenditure against those approved activities. Details of any circumstances since the end of the financial year that could or has affected your organisation's activities. Likely developments in future years. Are you going to have increasing costs for equipment replacement, building repairs if you own a building, etc.? Details of the organisation's compliance with particular laws and regulations, and more recently environmental regulations. Names of committee members and the period for which they have filled the position. Information regarding any payments to committee members. Are they getting reimbursed for costs and have these been approved? The other area that is particularly of interest now is insurance, with premiums increasing, and you need to understand what you are paying for and what indemnities are offered by your insurer. Information regarding the solvency of the organisation, preferably half yearly. Are your expenses starting to creep ahead of your income from whatever income source you may have? Keep yourself safe. Any significant or sudden deviation from the budget approved by the committee at the start of the financial year must be approved by the committee. An unexpected slump in income revenue compared to previous years. Have you had wet weather and people haven't been able to participate in your events? You then need to look at how you curtail your expenditure to offset that loss of income. An unexpected surge in costs incurred compared with previous years. As I said earlier, have your utility charges, your electricity charges, leases and other costs that's gone up. A failure to obtain independent valuation of major assets. A reduction in the value of the organisation's net assets. Has your organisation been borrowing from your reserves because of increasing costs? A lack of clarity to the source of funds. Too often when community organisations receive grants, they put it in their general fund. You should be looking at separating out so that you can account for grants separately. Late reports. Ensuring that all reports and information are delivered on time each month, quarterly, half yearly, and obviously for the year end. Last but not least, and this is where an area of particular concern, is vague answers to questions regarding financial capacity from those responsible for assessing the organisation's financial capacity. It may simply mean that they don't have a good understanding of the role and you need to look at how you can support them. Or it may mean that in fact your finances are in difficulties and you need to take action. In closing, it is very important that you look at your financial records and take steps at all times to ensure that your organisation is operating on a sound footing and that any unexpected increases in cost are being covered. And in fact, if you have increases in income and grants, that you account for these properly and take full benefit of the new income or the grant to deliver better services. Last but not least, always ensure that your records are accurate, timely and presented fully to those who have a need to have access to the information.